Hiya, this is Thinking Solo. I'm Ryan DeRusso, a fee-only advisor. Today, I'm going to go through exactly what an S-Corp is. You've probably heard your CPA talk about it. You may even have one, but you might not understand what it is or why it matters. Today, we will dig into the specifics of the S-Corp to help you understand why you might use it and why you might not. Let's get started. While the LLC, PLLC, and S-Corp sound like a letter jumble, it's actually quite simple. The LLC or PLLC allow you some small layers of protection from your business. If you were to get sued, for example, then the LLC can sometimes protect your personal assets, like a house. Everything you make in an LLC, however, is taxed to you. The S-Corp works differently, though. In an S-Corp, you're both an employee and an employer, and you pay yourself as both. The employee side of you gets a salary. The employer side gets a dividend for investing in the business. This sounds simple, but what does it mean? Well, it can save you in taxes. Let's explain. When you work for yourself, you pay what's called self-employment taxes. These are essentially Social Security and Medicare taxes. When you work for an employer, your company pays half of this amount. When you work for yourself, you have to pay the full 15.3% amount plus regular income tax. The S-Corp, however, protects you from this. If, say, you make $100,000, if you're an LLC, then self-employment taxes are paid on the full amount. If you're an S-Corp, however, you can pay yourself $80,000 and only be taxed on the self-employment side for the $80,000. What happens to the $20,000 extra? It doesn't face that self-employment tax at all 15.3%. But you can still use it by taking it as a dividend. It really depends whether you should use an S-Corp or not. The IRS says you have to pay yourself reasonably for the position you're in as an S-Corp. If you're not making enough to pay that reasonable amount, then maybe not. Or if you're reducing your self-employment taxes too much, then you will impact what you earn for Social Security. Remember, this tax is for Social Security. You'll need it in the future. Finally, you have to make and have good bookkeeping to make it work. It requires talking with your planner and CPA to make sure it's right for you. But whether you have an LLC, PLLC, or S-Corp, you can take advantage of the S-Corp designation. So whether it's right time for you, well, that depends on your business. But when you're ready, you can make that decision. What do you run? Tell me why. This is Thinking Solo. I'm Ryan DeRusso. I'll see you next time.